You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done for professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 29th day of April, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, point any internet-connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. You'll also find us streaming live during the show on YouTube, Facebook, and Twitter. Let's open with a word of prayer, as we do here of late. A little different prayer today. Father, we first and foremost thank you for your blessings, for your mercy, and for your grace. And today, Father, I want to pray for all the people of the world who have been, I believe, misled by our so-called experts. Many of them, those that we trusted so much that we elected them to public office. Others who have, I suppose, earned their place in the world of academia and medicine. I feel, God, that it's becoming so evident to me that this was some type of engineered experiment. And I don't mean to make light of this at all. God, every human life is precious. And I know that many lives have been lost during this crisis because of COVID-19. But the way that it's unfolded, the things that the people of the world have been subjected to, God, I pray that starting today, you'll open the eyes of your people to see this thing really for what it is. And of course, our faith, our trust, our hope is not in men of science, men of medicine, or men and women of political office, but our hope, our faith, our trust is in you, God. Because the ones we trusted here on earth, our fellow citizens, it's becoming increasingly blatant that they've lied to us. Hollywood, mainstream media, academia, the medical field. It's hard to know, God, where to even start. But you understand the situation that we face. God, we were told that masks could not protect us. Then we were told that masks could protect us. And we, the people, not knowing, not being men of science, we did as we were told. And somebody, somewhere, was keeping a chart, keeping a graph. How far will the lemmings go? How far can we push them? So again, God, number one, we pray today that the lies stop, that those we trust stop lying to us. Tell us the truth. We can handle the truth. And Lord, help us as your people to be able to better discern what is truth. We were told in the beginning we didn't have enough data to make informed decisions. But it turns out we did. We were told, God, that draconian shutdown measures were our only hope, locked away in our homes as our economy sputters. Jobs are lost. Lives destroyed, perhaps not by the virus itself, but because of these draconian measures that we were told were so needed and so important. The number of people infected. We don't know truly what numbers to believe. It appears that anyone who has died of late may have had COVID-19, but they may not have died of COVID-19. So I believe that these numbers, God, are being used to manipulate us, to control us, to keep us in a perpetual state of fear. The number of people not only who contracted it, but who died from it. I believe we've been misled there. Social distancing. We're told that we're heroes because we managed to stand 6 feet away from another person. But we don't know what level of truth there is. God, we were told that if we could just flatten the curve, that would be the magic bullet. But now that we flatten the curve, suddenly we see that the goalposts have been moved. What's really behind this? Is it a quest for power? Is it an attack on our president? Is it an attempt to keep him from finding the second term that I and many others who listen to this radio program believe that he rightfully deserves? This business about antibodies, are they meaningful? Are they meaningless? Can we reopen? Can we not reopen? God, I don't want to become the person who is forever suspicious. I don't want to be the person always chasing the next conspiracy theory. I don't want to be the guy screaming, the man, whoever the man is lying to you at every crook and turn in the road. So God, we need your help. We need you to give us clarity of thought. We need to hear from you, not from the talking heads on TV or radio or on the internet, but deep down in our spirit by the power of the Holy Spirit. I pray today, God, that you begin to speak to your people. Allow us to begin to see the real truth, your truth, the eternal truth. In Jesus' name, amen. Okay, guys, let's do as we do at this point in the show. Let's go to a daily chart of the S&P 500 Emini Futures. And boy, do we have a bullish green candle cooking today. Let's scroll a bit and get everything in view. Volume-wise, today we got 915,000 contracts traded in the S&P 500. Remember, the session started last night, 6 p.m. Eastern, for the Wednesday session, just as tonight at 6 p.m. Eastern, the Thursday session will start. Yesterday we did 1.5 million. Monday we did just over 1 million. Today so far, we're 916,000. So if we stay on track, we should end up the day, I would think, around 1.5 to 2 million, somewhere there. But the big story really is in price, not the volume. Now, we highlighted this area, which we anticipated as good resistance, and it was on the first trip up. It was good enough resistance to send us in the opposite direction, seeking support, which we found at the BBC. That support sent us back to resistance, and that area held us in check for 2 days. Yesterday, we started out, we had a very nice green candle. It looked like me, you, and Alice were going to the moon. That spike high looks like about 29.13. In fact, let me get this circle out of the way. I can actually measure it. 29.13.5. Okay. So today we have, now when we hit that high yesterday, it sent us back down to the low of the session. In fact, at one point it took us lower than the opening of yesterday's session. Today, we've taken out that swing high at 29.13.50. We have a high of the session at 29.33.50. And now this window of opportunity sits overhead. And that runs from roughly 29.30 up to 30.41. Now we'll round it off, call it about 100 S&P points, which is equivalent to 1,000 Dow points. Right here, this is where we would anticipate running into resistance once again. I'll change the color so it kind of stands out. So we break through resistance, off we go in search of the next logical spot to find resistance. So why doesn't the little window of opportunity extend all the way up? Well, because it's at this point it would be wise to take profits, take some profits, or begin trailing a little more closely with your stop loss, because buyers can often come in early, as we call it, or sellers. When you have a nice move in the market and then price returns to that same area, price doesn't always come back to touch the exact swing low or the exact swing high. Traders who participated in the previous move, or who perhaps missed the previous move, as they see an opportunity to purchase in that same area or sell in that same area a second time, not wanting to be left behind, they purchase their tickets early, and so the pullback stops and the market actually turns and moves in the other direction. So this is where we sit today on the daily chart. We're above the BBC. Yesterday we were dealing with, well, over these two candles, we had red and falling, which is bearish, and then we've switched back now to blue and climbing, which is bullish. And if we take a peek down at the slingshot just doesn't really get any more bullish than that. Not only are we blue and climbing, we're above the 50-yard line. So onward and upward until the next major economic event, which this afternoon, as Michael reminded me this morning in the live training room, we have a Fed announcement. And I'm going to pull up my news page. In fact, I'll pull it up over here so you can see it. Let's check out investing.com. Now, this is the news site I use. This is for regularly scheduled economic events. Right here, economic calendar. Michael uses a different one. It's just a matter of personal preference, whichever one you've used or use and get accustomed to. Now this gives you...
And there's also the one that's right on DT Pro.
Yeah, DT Pro has one built in. Absolutely it does. So today, Wednesday, April the 29th. If you look down the left, you'll see the little flags representing the different countries that the news is coming from. And when these are global markets today, so a major economic event in the UK, out of China, those can very much have an impact or an effect on our markets here. And so scrolling down, I see that they've changed their little steer heads to a star-based system. See that, Michael?
I do see that.
Yeah, that's the first time I noticed that. So scrolling down, looking for the U.S. flags or any high-impact events. A high-impact event means that all three of the stars will be lit up. One star is low volatility, and then two stars, moderate volatility. So scrolling. Here is the high-impact news from today at 8:30 a.m. Eastern this morning. We got the GDP numbers. Worse than expected. yet the market's climbing. On the back of 5 large cap stocks, I just might add and throw in there. We can talk more about that later in the show. And then at 10 a.m. Eastern, we had pending home sales. Came in worse than expected. Folks have some things on their mind right now, probably other than out buying a house. However, I will say this, because of what's happening in the economy right now, if you are in the market for a home, or if you're in a position to consider purchasing a home, whether it's for you to live in or as an investment,
Or for your in-laws.
or for your in-laws, there are probably some pretty good deals out there right now. Even commercial office space has been hit pretty hard. I'm sorry?
No, commercial office space, I totally agree with you on that. But, it depends on where you are as far as the deals. Because, right here, it's still a seller's market. There's no supply for nice houses.
Really? Okay.
Yeah.
Okay.
Because we've been looking for 2 months.
We had crude oil inventories today as well. And just looking for 3 stars. FOM statement today at 2 p.m. Eastern. Fed interest rate decision at 2 p.m. Eastern. And then, of course, the press conference at 2:30. And those are all high volatility. So our recommendation always has been, ahead of these important economic events, and we've got 3 here happening over the course of an hour from 2 p.m. Eastern to 3 p.m. Eastern, the best position is no position. Now, it can be tempting because the market, sometimes will take off like a rocket ship to the upside or drop like a rock to the downside. And it's so tempting as you see that train leave the station. Hey, wait for me. Boy, but just about time you manage to catch up to the train and jump onto the caboose, as they do in the movies. Suddenly that train goes, slams on those brakes and heads the other direction. And you're like, what happened? So what we believe, and the way we look at it, is we let the move happen, whatever that is, up, down. You just sit up in the bleachers and watch the action down on the field. And then let it retrace as much as it wants to retrace. And then, as it begins to trade back in the direction of the original spike, markets are usually a little calmer by that point. Cooler heads are prevailing. And that's where you can find a low risk, high probability opportunity. So, with that, let me give you the numbers from around the world. Starting here in the U.S., these are the cash markets, the indices. And here at home, the Dow is currently up 535 points. NASDAQ is up, well, that's a gain, by the way, of over 2%. NASDAQ is up 291 points. That's a gain of over 3%. S&P 500 is up 77. That's a gain of almost 3%. And the Russell 2000 is up 65 points. That's a little over 5%. In the commodity basket, crude oil up $3.58, trading $15.92 last. That's a gain of 29%. Gold down $6.80, trading $17.1540 last. In the Asian markets, at the close, the Nikkei was down 12 points. Shanghai was up 12 points. And the Hang Seng gained 67. Pretty light trading in the Asian markets. And in the European markets, at the close, FTSE posted a gain of 156 points, 2.5%. The DAX rose 312 points, 3%. The CAC added 101 points, 2.25%. That gives us a mixed day in Asia, a green day in the UK. And so far, it's a big green radio Wednesday here in the US of A. And when that Fed announcement comes out today, at 2 o'clock Eastern, you'll get an initial reaction just based upon whatever the Fed does, and there will be a few comments made about it. So there's a reaction there. But then 30 minutes later, the Fed chairman will hold a press conference. He will take questions from the press, and based upon how he fields those questions, answers those questions, you may see another wave of volatility hit the markets. So again, as these announcements come out, the best position is to be flat. As the press conference is going on, best to be flat, because you never know what the next question is going to be and what his answer will be. He's gotten pretty good at handling these press conferences of late. Early on, he was very stern, and he actually talked the markets down on a number of occasions. And he's got a little better. And so, whatever happens today, we're going to watch it. We're going to watch the reaction to it. And then as markets get back to their normal rhythm, the new normal rhythm, that's when you'll see alerts start coming through the Logic 247 channel. And with that, we'll go to Michael, get a recap of everything that happened in the live training room today. Now, yesterday, somehow, the YouTube video did not have the audio of anyone but me, which everybody in the audience clearly heard everything. I'm not sure how that happened, but if someone who is listening via YouTube today, if you can let me know. In fact, you know what I'll do? I'll check YouTube while you're talking, and if I don't have audio for you, Michael, when I launch YouTube, then I'll start scrambling to figure out what the problem is. We do record the show locally, or Valerie does on her computer, just in case something like that happens. We have a backup that captures all the audio, then we just have to replace the faulty video with the good one. So hopefully things are working. Yes.
I have done that.
Oh, thank you so much. I appreciate that very much.
You're welcome.
And for those of you that have questions, okay, I'm not able to monitor all the chat boxes, the Facebook, the Twitter, the YouTube. So if you want to ask questions, you can of course post the questions in our Telegram discussion group, or you can use the login instructions I gave you at the top of the show, where you go to our homepage, and on the right hand side at CFRN.net, just click that big microphone, follow the instructions. You'll have a chat box, and that chat box is monitored throughout the entire show, because if you have questions, well, we want to answer them. So here we go.
Okay.
It's all yours.
I got it. Now, I was just poking around this morning and I found something that was kind of interesting. Yahoo Finance is still on the June contract. And June contract's trading at $14, whereas the July contract is trading at $19, almost 20. I just thought that was interesting. That and Bitcoin, top seat, $8,000. All right. So let's get back to what I always do. Here we go. If you have not taken a free trial with us, go to the home page at, good afternoon, everyone. Today is Wednesday, the 29th day of April, 2020. If you have not taken the free trial, go to the home page at CFRN.net. And right here it says free 5-day trial. Just click on that, and you'll be brought to this page, eminitrainingschool.com. You can go directly to this page if you want to. On this page, all we ask for is your name, your email, and your phone number, and you can fill this out if you want to. Hit the send button, and you'll be sent a confirmation link. You must click on the confirmation link. Okay. If you don't click the confirmation link, we don't know that you took the free trial. All right, the results. Today, I said this morning I was just going to focus on gold. I did look at, I was watching the other markets because, people were asking questions about them. And so I was watching the other markets as well. But on gold, we had 20 ticks. Now, gold is the only market we traded this morning, and we had 5 trades, and we made 20 ticks and $200 a contract. Today, it took 19 minutes in 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 5. So on the month now, we're $8,151 per contract. That's over 20 days. Averaging $407 per day. On the year now, we're at $30,125. That's over 78 days, averaging $386 per contract per 2-hour day. Okay, so let's take a look at what happened here. All right. I'll just go all the way back here. Okay, so our first trade was right here. We picked up 10 ticks on that. The next trade was right here, and somehow I didn't get anything out of that. The next trade was right here. I got 5 ticks on that. Looks like I missed a trade right here, but I was probably writing down in my log that first trade. But I got 5 ticks here. I got 5 more ticks here. That put us at plus 20. I missed this short here, which would have been nice. Would have been 5 or 10 ticks. I got a break even on this one. And it got, it was a choppy grind down, is what I'll say. There was a long here that would have been a break even. Looks like there was a short here that I totally missed. A long here that would have been profitable. And that was it. Then you get into the break, and it got really choppy during the break. Now again, what Dwayne was just saying about the FOMC, that's going to have a big effect on gold today in the indexes. The euro, well, I didn't do anything with the euro, and really there wasn't much to be done. It was really choppy today. It didn't give a single trade setup. Crude oil, I didn't do anything with crude, but it had a nice run right in here. I don't know why. It had that. Oh yeah, crude inventories. That's why. Had a shorting opportunity right here that would have been a break even. A long, ooh, where'd that go? A long right here that may have stopped out to the tick and then gone up and done what it should have done. And well, then the inventories came out, and then crude started this nice run up right here. I didn't do anything with it, but there was a long right there, a long right there, a long right here that probably would have stopped you out to the tick. Then you're going into the high of the day, so probably wouldn't have had anything right up there. It spun around and gave a short in here that would have been a break-even trade. A short here and a short there. A long there. And then you get into the break. And it really didn't do anything during the break. It was just a mess. It would have been a long right here that would have probably been break even. Okay, now the ES. Again, we didn't do anything with any of these other markets this morning. The ES had this grind right here, up. And, down here in the slingshot, it's not that I didn't want to trade it, but it's just, when I was looking at it, I just see this kind of stuff right here, and that makes me just want to put my mouse away. Down here in the slingshot, right here would have been a trade. And I'm just looking at the way that this is trading, and I had a feeling it was going to be like this today because we had the FOMC. Well, we have the FOMC coming up, and it's going to be a big deal this time because of this virus stuff. But right here and right there were long opportunities. And that's really it. That was so, after last month where we had just so many trade opportunities triggering all the time. Right now it's pretty limited, really. Right now it's gold. And gold is the one that's got the most trading opportunity right now. Okay. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 29th day of April. Today we made 20 ticks in gold, put us up $200 a contract. Took 19 minutes and one trade to get to $100 a contract, and we took a total of 5 trades. So on the month now we're up $8,151. That's over 20 days, averaging $407 per day. On the year, we're at $30,125. That's over 78 days, averaging $386 per contract per 2-hour day. Okay. If you have not taken our free trial, you should go to the homepage at CFRN.net. Now you can go directly to EminiTrainingschool.com, but if you go to the homepage at CFRN.net, there's just more information for you. Click on this green button right here, free 5-day trial, and that's going to bring you to this page, EminiTrainingschool.com. And if you scroll down, all we ask for is your name, your email, and your phone number. And you can fill this out if you want to. And hit the send button. Once you hit the send button, you will be sent a confirmation link. Okay, you have to click on that confirmation link, or we don't know that you took the free trial. I mean, look at it right now. This is, let's look at it on a larger time frame. This is today. So we've just been going up pretty much all day. And now as we get closer to the FOMC, there's a lot of buying right here. And starting out this morning, early this morning, we had a big run up, then a pullback, and this was based on news this morning. This big run up was based on news, and now it's just grinding its way up. It's craziness. Okay, enough. And with that, we can pass it back out to fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
He'll be right here.
Okay. Hang on. I just wanted to see what was in here. So, Alex. It's funny. I have all these different Alexes. And one of them is named in Ninja Trader is Alex. Did you want to trade this afternoon? I don't think we should. But we can. I think we're better off waiting until tomorrow, if you're going to have a chance tomorrow. Yeah, let's do tomorrow. I don't think we should do it today. Okay. Now it's beautiful here today. 78 degrees and sunny.
Rain in northern Kentucky.
I'm sure we're going to get that. It might just go right over us up to Alex. I'm looking forward to my walk this afternoon. And Jada got 3 more cases of food for the food drive. It's her contribution. The 3 cases that I bought was my contribution. They are definitely going to need my truck to bring all that stuff to the food pantry. You ever lie down, take a nap, then wake up and not know what day it is? I took a nap.
Can't say I have.
No, I took a nap last night, and then Jada came and woke me up and said, "Come on, let's go for a walk." And it was, the position of the sun. The sun was going down, so it was dusk, and sorry, Dale. So, and I got up and I just said, "Okay, baby." And so I, put the leash. Well, I gave Fern her leash because she carries it by herself, and I started walking, and then I realized it was still last night. I thought it was the morning. Of course, me, being totally dressed with my shoes on, didn't clue me in. When I sleep, I sleep soundly.
Just to let you know, keep going, but I just want to let you know I'm here, and we do have the problem with the audio on YouTube again today. And I'm looking to see if there's anything I can do, anything obvious to fix that. And nothing jumps out at me. So, my apologies to everyone. And since anybody that tunes in on YouTube won't be able to hear me when I take the screens back, I'll type a little message and encourage them to just go to the website and log in there if they want to ask questions. And I'm sure that the something just got clicked or switched somewhere, and I'll find it and I'll fix it. So, anyway, back to you.
Okay. Well, I'm ready to go out to you.
Okay, doke.
So, you can take the charts
that,
out.
I'll grab the charts.
And I got some Ninja Trader stuff that I got to get caught up on.
Okay. All right, then. Recap of the recap.
Today, 19 minutes, 1 trade, $100 contract.
Good job.
Thank you.
Good job. Okay.
Bill 0 hedge. If S&P closed above 2,900, funds will switch from 69% short to 100% long. That's 0 hedge funds. Well,
okay.
We'll see in an hour and a half where things are. A little typo there.
Osseo? Well, that's how my people say it now. Audio issues on streaming platforms. Go to CFRN.net. The big microphone and follow the instructions to hear the audio and ask questions.
There you go.
Sorry. Audio issues on streaming platforms. Go to CFRN.net, click the microphone, follow the instructions to hear the audio and ask questions. Okay. All right, and I will make sure I get it fixed before tomorrow's show. All right, guys, here's where we'll start out. Let me close down these windows I just opened and that I don't need. will drag up into your field of view a recap of Logic 247. We are currently in week 91. 91 weeks can just sort of fly by. And they have. Okay, here's where we stand. Week 91, as of 12/20, when Valerie did the recap, we've issued a total of 45 alerts, and it's only Wednesday. I think the total last week for the entire week might have been 55, so we've got a few more alerts than typical this time of the week. 2 of those have never triggered. Or 2, we've actually just wrote them off. We don't think they're going to trigger. And we're moving on to a different setup in that particular market. 3, waiting on a disposition. That left us with 45 actionable alerts. 32 reached the final target. 4 reached at least the initial target, or if there was only one target, then it made it 60% or better to the target. 4 have been stopped out, so that's 10% of the Logic 247 alerts so far this week have been stopped out. We average over the last 90 weeks about 20% of actionable alerts getting stopped out each and every week. On the alerts, we don't want to risk more than $300 per contract per trade, less when we can. And we teach each one of our traders a 3-step methodology, because when an alert comes out, we don't want you to just blindly trade it because it's an alert. We want you to actually go to your chart, and based on what Michael has taught you each day in the live training room, the core methodology, what's under the hood, we want that to line up with the alert. We want the indicators to support the alert. Now, sometimes I'll send an alert out and it might trigger in 10 minutes. Sometimes it might be a few hours. So the more time that lapses between when the alert's issued and when it actually triggers, the structure of the market can change. There could be a new swing high or a new swing low. And so when you have an alert supported by everything you've learned in the room in the morning, that is a high probability opportunity. And the purpose of the 3-step methodology, again, is to place your stop not where I say, not where the talking head on TV says, not where the Wall Street Journal says. I don't think they say it, but if they did, you're actually getting your information from the market, from the chart itself. The chart will tell you where you need to put that stop loss. And if, after completing the 3 steps, if it still requires more than $300 of risk, our suggestion is that you pass, wait for the next trigger, because as you know, important prices, important areas are almost always tested. So on most days, the alerts will trigger more than one time per session. If you don't have the patience to wait for the next trigger, then you might look at another market, at a different alert, and you might say, well, I only trade the S&P, or I only trade the crude. And that's fine. There's absolutely nothing wrong with that. But keep in mind that the methodology Michael teaches you in the morning in the live training room, it's fluid across all markets and all time frames. So we trade crude the same way we trade the S&P, the same way we trade soybeans. And of course, there'll be people that'll say, well, that's not possible because, the different markets have different personalities, and I don't even argue that point. Whatever that really means, different personalities, I don't disagree with it. I just believe that it does not impact our style, our method of trading. So, whether it's crude or soybeans or the S&P, we look for the same things using the same indicators, using the same strategy. Okay? Now you might look at Michael's work in the morning and then look at what I've done with the alerts, and to the naked eye, well, that's two completely different things. Well, they do look different because I use a larger time frame and risk more. In the live training room, there's an 8-tick hard stop on every trade. The reason we do it that way is, number one, we want you to learn the importance of always having a hard stop in place, not a mental stop, but a physical hard stop on every trade. Okay? If you put on a trade and you do not have a stop loss, you're not trading, you're gambling. And one of the reasons that 9 out of 10 new traders fail is because they approach the market from a gambling perspective as opposed to a trading perspective. Some folks are just looking for somebody they can follow, copy, mimic, or just some alert numbers that they can trade. And in the beginning, for all of our students, of course, you will follow along with Michael. And you will use the alert to alert you to a specific opportunity in the market. But our goal, what we're working towards, is the day when you look at a chart and you see exactly what Michael sees, you think the way he thinks, which leads you to take the same action that he takes. So in the beginning it's an alert, but over time it becomes more of a confirmation. In other words, when your phone goes dee-dee-dee, or your computer, whichever you're using at the time, when it makes that little telegram sound, you look at it and go, yep, because you've already, under your own power, you've already put the trade on. Because we teach everybody the exact same thing. Okay? So we have a large group of people who are taking action at the same time, at the same price. And of course, I'm sure you've heard this before. Well, hey, if too many people know about this, well, then it's not going to work, or something along those lines. Well, because of the way we enter our orders, we always buy on a stop or sell on a stop, which is very much different from buying on a limit or selling on a limit. So let's say, let me bring up a 30-minute chart. Crude. That's S&P. S&P 30-minute. Okay. So, let me just use an alert, an actual alert, so that you can clearly see what I mean. Let me go find it. Here we go. Okay. In fact, I'll use this opportunity right now to give you an opportunity to grab a screenshot. So let me find them. Here they are. Okay. All right, last night, Tuesday night at 6:55 p.m. Eastern, all of our members and everyone on a trial got these alerts. On the S&P, Concierge Trade Alert was to be long 2884 or short 2850, whichever presents first. The way I recommend that you deal with these when you get this static report. Now, this report is based on historical price behavior. Logic is based on current price action. This is based on historical price behavior. So the idea is when the numbers come out, you put two lines in the sand. So get rid of this guy for now. So that number was 28.84. So we'll have to scroll back a little bit. And again, the alerts came out at 6:55. So that's going to be the 18:30 candle Eastern. So right there, that candle. Okay. With 5 minutes left in the life of this red candle, the alerts came out, and the alert again said, consider being long. At 28.44. I'm sorry, 28.84. That makes a little more sense. Now, I did mention that important prices and important areas are almost always tested. I'll show you what I mean by that. Okay, so 28.84. On the first trigger, price ran in the initial 30-minute candle, and this triggered at looks like 2100 hours, 9 p.m. Eastern. During the life of this candle, we triggered 28.84, and that candle, the one that triggered, ran up to 28.96. So that's a 12-point move at $50 a point. That's $600 per contract traded. If you stayed in the trade, we put in a swing high at 28.98. So that would be 14 points. Is that correct? No, the swing high was actually 29.05. So 29.05 minus 28.84, 21 points at $50 per point. It's $1,050 per contract traded. Now, that's if you got out at the exact swing high. Getting out at the exact swing high is a difficult thing to do for man, machine, anything, because, well, we can't tell the future. No one can. And what do? Well, I'll get into that in a second. Let me just point out that price got back below the trigger and put in a swing high at 28.97. So from 84 to 97, that's a 13-point move at $50 per point. And we currently are trading 29.38 minus 28.84. That's 54 S&P points at $50 per point. It's a $2,700 per contract move so far. Now, if you can't get out at a swing high, what are you supposed to do? Well, today's only Wednesday, but because it's Fed Day and all of that, I'm going to go ahead and share. Now, our partners, members, family, get the weekly trading zones, which provide the framework for the whole week. Monday morning, 6:15 a.m. Eastern, in the private Telegram channel. When you're on the trial, we share them with you as well. Those numbers, once published, are carved in stone for the entire week. We don't change them in any way over the course of the week. We've been publishing the zones since December 14th of 2009, so decade and, I don't know, let's see, January, February, March, April, so 10 years and 4 months. Interestingly enough, in in a business where there are very few absolutes, the way price behaves in and around the weekly trading zones, honestly, it hasn't changed in all that time. So the next zone overhead is actually the highest weekly trading zone for the week, and it's up at 29.93/94. And I'm going to start doing something a little bit different. Okay, the highest weekly zone is 93/94. So I'm going to put just one line on my chart. And thanks to Greg in a mentoring session yesterday, as we were talking, he said something that got my wheels turning. And I made a post last night that I'll share with you in a minute about how I learn something new every day. I worded it well, so I'll read it to you here in a bit. So instead of putting two lines, taking up, I've cut the time in half. So going forward, when you see a weekly trading zone at 29.93.5, you know that weekly zone is actually 93/94. Now you can continue to use the app that Mike built, the indicator that he built that will just automatically plot the weekly zones onto your chart for you. You don't need to change anything, just for the simplicity of the show and to keep my screen as uncluttered as I can. So remember, going forward, there'll be one line instead of two, and it'll be halfway between. All right. Now that's going to, now that I think about it, with crude, that may present an issue. We'll look at it when I get there. All right. So what's the next zone below that? That is at 28.82/83. 28.82. So what I want is 28.82.50. 28.82.50. Okay. Now, this is a last week zone, I do believe, 58.59. Yes, and I want you to notice how important last week's zone has been this week. Let's see, 26th was Sunday night. Okay, so last week's zone, this week, okay, here's the Sunday night Globex open down here. This was the actual open this past Sunday night. So we spiked above that zone, got below it, then we worked our way up to the zone I'm talking about now from last week, 58.59. Price couldn't get through, so it pulled back to the BBC, made another run, pulled back, made another run. So 1, 2, 3. On the fourth attempt, it managed to get through, only to be sent right back there again on Monday the 27th, where we consolidated for 1, 2, 3.5 hours. And we put in a double bottom there, and that launched us up to this week's zone at 28.82/83. Now, this area right here, drag this across. Okay. This was an area where we thought there could be potential resistance, and it was. It sent us back to the zone at 82.83, where we caught another bounce. And when we couldn't trade any higher, remember there was a swing high right here. So we have to consider that price to be potential resistance until proven otherwise. Okay? So it ran up to that area. It was resistance. It did send us back to the zone, to the weekly trading zone, to this week's weekly zone. And we launched this pretty incredible move that we're in right now. Okay? So on the S&P last night, this alert right here, we triggered once, we triggered twice, we triggered 3 times, and the highest weekly zone for this week for the S&P is up at 93/94. So still, a good 50 points overhead. Now, do I think it's going to travel in a straight line to get there? I don't. Also, just because it's the highest weekly trading zone, it doesn't mean that price has to go there or is even supposed to go there. What it's saying is that on close of business Friday afternoon, we expect price to be at this zone or below. We don't anticipate price trading above 29.94. Well, we may trade above it tomorrow, Friday, but by close of business, we expect to be at 29.94 or lower. And the same applies to the lowest weekly trading zone. If we were headed in that direction, we might trade below the lowest zone at some point during the week. Doesn't happen that often, but it does. But by close of business on Friday, we expect to be at the lowest zone or above, if that's the way the market's trending for the week. Okay. Now, let's see, in the comment box, from Bill. Bill says, yesterday's zero hedge. If the S&P closes above 2,900, funds will swing from 69% short to 100% long. So 2,900. It's right here. So that was that area that we, for our, I'm sure they had their reasons, whatever they may be, technical, I assume. They expected, this to be decision point. So we traded above it here, and then we stalled out at it here, consolidated, and on the 1, 2, you could say on the 4th attempt, we finally got through that 2,900 area discussed on Zero Hedge. Thanks for sharing that, Bill. And here we go, up, up, and away. Now, before we move on to the next market, let me just add our indicators. Okay. When price is below this green line, the BBC, stands for bull bear cross. When price is below it, we look for lower prices. When price is above it, we look for higher prices. It's that simple. Trading is not easy, but it can be simple. Below the green line, look for lower prices. If price pulls up to that green line, expect resistance until proven otherwise. So this time, the candle that pulled up and touched it, of course, was green. The following candle was red. Resistance sent us back down to support. Support, when it couldn't be taken out, sends us back to resistance, the green line, which sends us back to support, which is blue and climbing. and we rode the back of blue and climbing all the way up to that area where we anticipated resistance, pulled back to the BBC and this week's weekly trading zone where we found good support. Put in a little double bottom there, kind of like this little double bottom over here, double bottom here. And on this move, we took out that obstacle. We sailed right through this obstacle right here. We then sailed through this obstacle. And do we have anything significant between us and that highest weekly trading zone overhead? I don't see anything, do you? Okay. All right. So now let's put that. So what did we end up determining this last move so far was? So we're trading 29.42, 29.42 minus 28.84, 58 points times $50 per point. $2,900. So it's a $2,900 per contract move so far. We don't have an exit signal yet. What is an exit signal? I'll show you. So that's a $2,900 per contract move. Okay. So far. This little black line we call the step line. It steps up and over, up and over, up and over. We have crossed from the left side, blue and climbing, to the right side. That's our first indication there could be some, weakening of this move. The price says not so fast. What we're looking for is the step line to be on the right side, blue and climbing. And then we're looking for the first red candle that closes below the step line. Like on this move right here, 28.84. Okay, we're talking about the same alert, multiple triggers. Okay, 28.84. Price rallies up, up, up. It gets to this area that we anticipate to be resistance. The step line, you can see how it's boldly climbing on the back of blue and climbing. And then the step line crosses over. Goes from the left side to the right side. Because it's a long trade, we're looking for the first red candle that closes below the step line, which would be this one. And the closing price is $28.98 and a quarter. 28.98.25 exit signal. Now, if we do our math based on that, 28.98, we'll just call it 28.98. Let's see, 28.98 minus 28.84. It's 14 points from the entry to the exit signal. And 14 times $50 per point. That's $700 per contract traded. Now for the trader who's earned the right to trade 10 contracts, that's a $7,000 move. From the entry to the exit signal. So what do I mean by earning the right to trade 10 contracts? When you become a member of the family, you'll be issued a little something we call the 2420 blueprint. It's designed to help a trader go from 1 to 20 contracts over a period of 24 months. Now that's in a perfect world where you never get sick, never take a vacation, never have to go to the dentist. You show up for work every day, you hit your goal every day. Again, it's the perfect world. And by the way, when you find it, would you please forward me the address? Because I've been looking for it for a long, long time. What I'm saying is you probably, or you won't reach 20 contracts in 24 months because life happens. Even if you have good day after good day after good day, life happens, and there are going to be times when you just won't be available to trade or whatever the case may be. So it takes as long as it takes, but here's how it works. You start out in SIM, no matter what methodology or strategy you're using or trying, you must demonstrate to yourself that you can be consistently profitable with that method before you put your real hard-earned money to work. Now, you may have watched all kinds of videos where this guy did it, and he did it, and he did it, and he did it, and he did it. And that doesn't mean that you're going to be able to duplicate his efforts, okay? So our parameters are this. We would like to see you put together 10 consecutive days in a row where you reach your daily goal in 10 trades or less. Once you do that, the blueprint will give you the green light to go live with one contract. Now, the money for that contract has to come from your savings, under your mattress, wherever you get your money. That's how you fund that first contract. Using that one contract, we want you to increase your account balance by $2,000. Once you accomplish that, the blueprint will give you the green light to add your second contract. This is a big day because it's the market shaking your hand saying, congratulations, you're a trader. Because you're adding your second contract, not with savings, but with profit you earned in the market. Just like you had a sandwich shop. You sell enough sandwiches that you're able to open a second location without having to go to the bank and borrow money. You use the profits generated from sandwich shop number 1 to open sandwich shop number 2. Now you've got 2 sandwich shops. And as you continue to work hard and you accumulate profits, the blueprint will tell you when it's time to open shop number 3 and 4. Now there's, no pressure to trade, any particular number of contracts. Different traders find comfort at different levels. By the time you earn the right to trade 5 contracts, 2 points a day in the S&P is $100. Now those same 2 points, when you've earned your right to trade 5, well, that's $500. And when you've earned the right to trade 10, that's $1,000. $1,000 a day puts you in the top 3% of all wage earners worldwide. Think about that for a minute. Let that sink in. The world's a big place. Lots and lots of people. If you're patient and diligent and do what you're supposed to do when you're supposed to do it, without hesitation, without jumping the gun, grinding it out, as some say. Life is so much about perception. Given the same set of circumstances, 2 individuals might respond in this way. Hey man, how's it going? That's me saying, hey man, how's it going? One guy goes, I'm stuck in a rut. The other guy, same situation, same circumstances, he says, dude, I'm so glad you asked. I'm in the groove. Perception. Perception is a powerful thing. We want trading, as excited as you are to become a trader, we're going to work as hard as we can to make it as boring as we possibly can. Boring, boring, boring. You go to the office, whether that's down the hall or downtown, you reach your goal for the day, and you put your mouse away. Not only do you have an opportunity to someday perhaps enter the top 3% of wage earners worldwide, which could lead to being in the top 2%, you've also achieved something very special. The most precious commodity we as humans have, time. You see, you can always, if you have good health, you can always go out and make some more money, whether it's cutting the neighbor's lawn or starting a new business. But no one other than God has figured out how to whip up another batch of time. So when you enter into a business, it not only allows you to earn a good income, but also gives you precious time to spend in the manner that you deem appropriate. You know, what really matters to you. More time with the family? Cool. That's a great thing. Let me pop this up again just in case somebody's trying to log in. That's a great thing. To have more time to spend with your family. Maybe you want to do more missionary type work. Maybe you want to improve your golf game. I don't know. I know that from talking to most of our traders, they have, some of them, I guess, golf and do other things, but what I hear the most from our traders is God has given them a vision for, shown them the purpose he created them for, the destiny he created for them. But as those of us who have gone into ministry on any level, we realize that ministry costs money. Now, while starting an orphanage, which is what God directed my wife and I to do back in 2000, while that's a noble endeavor, it also costs real money. I mean, putting a roof over the head of 700 to 1,000 kids, that costs money. And I'll tell you what, when the cock crows and the sun rises each day, the sound of 700 little bellies growling because they're hungry, you can hear that across the African plain. Right? Think about it. So, how has that need been met in the past historically? Sadly, it has involved men of God going before men of wealth and power who might not even believe in God, with their hat in their hand, shuffling their feet, asking for a handout. Now, let me ask you a question. The God of Abraham, Isaac, Jacob, and my grandmother, the God I serve, the only true living God, if he could create this world, hang the stars in their place, tell the ocean how far to come in and then how far to go out, does he really want me begging for handouts? I mean, a God that powerful could he not supply the means? I said this the other day. If God sends you on a mission, he will also send provision. Okay? Now, I'll be the first to tell you that not everybody's cut out to be a trader. Some people don't want to hear that, and I'm sorry, but it's true. Now, it doesn't mean you can't learn, okay? But for certain people, it's more than just learning how to trade. It's also learning how to exercise self-control, self-discipline. And you know what? Trading mirrors life. So if we can develop discipline and patience and all these other qualities that a good trader needs, that's going to have an impact on the rest of your life. People are going to start to notice you as the guy who has a lot of patience. The guy who's disciplined. So it'll have a positive impact on your whole life. The market was just a wake-up call that said, hey, dude, you need to get your life under control. So ministry costs money. Not everybody will be able to acquire that money from trading. Maybe you'll have some other kind of business. When my wife and I started the orphanage, I owned a few stocks. I had placed a couple trades way back in the day, but I didn't consider myself a trader by any stretch of the imagination. It was the previous business that we owned. It was the income generated by that business that allowed us to do the orphanage, to do the home for battered women and abused children, which is also how I, as you guys know the story, became a father, and my wife became a mother, because we adopted from a young lady that passed through the home who was going through some troubled times, and I pray for her daily because she's still going through some difficult times. So anyway, God always has a plan, a master plan. And so that business enabled us to start the orphanage, start that home for women, home for men in recovery from alcohol and drugs, our mission in the barrio down in Rocky Point, Mexico. Now, as we moved out of that business, sold it to my most successful employee, which was kind of a good feeling. What he did with the business after that's not such a pretty story, but anyway. Then I moved into the world of internet broadcasting and radio. We started CFRN in 2005, and we exited the other business in 2008, and it was a bumpy transition, but I felt God's hand on us and on our life and on what we were doing. And now, just because God calls you to do something doesn't mean it's going to be easy, because the enemy now sees you as a threat. The enemy cooked up AIDS, which is why all these kids in Africa were orphans. They had lost their parents due to the deadly ravages of AIDS. Chalk one up for the enemy. Then we come along, and with God's grace, we start an orphanage where these children can now feel loved and, wake up to breakfast and not go to bed with an empty stomach. Just know that they're loved. That's really an important thing, not only for a child, but for everyone. So we became a threat. So did he just walk away? Oh, well, yeah, God wins again. Nah, he doesn't give up that easy. From expensive water pumps that keep blowing up to, all kinds of things, anything the enemy could think of to throw at us, he did. But ultimately, God always wins, right? So I know I'm running late with my book, Trading in the Spirit. My plan was for it to be published and on the shelf by spring. Well, spring has sprung. Still working, still writing every day. I'll update that web page. If you would like to be notified when I finished it, you can go to eminitradingbook.com. eminitradingbook.com, and just drop your email address there. And as we approach publication, I'll let you know. All right, let's get moving with the rest of these alerts. I talked for a long time there. Has John shown up yet? There. Sorry, John. Hey, John, sorry to leave you waiting. Got lost in thought. How are you today? John, I can't hear you. I better jingle his phone. Let him know. Now, what we'll do, guys, is I will finish the recap. We'll go through every single one of the Concierge Trade Alerts. We'll go through all the logic alerts as we do every day. And you can always go to youtube.com/CFRN and watch all the previous shows. And we're going to get this audio problem fixed for those who tune in via YouTube and Twitter and Facebook. My apologies for that. Okay, so I rang his phone so he knows he has an open mic now. So we'll just move on. Or you know what? Let's do this. While we're on the S&P, let's just go ahead and take a look. Now that was the Concierge Trade Alert, CTA. Triggered once, triggered twice, triggered 3 times. Okay? Those are based on historical price behavior. The Logic 247 alerts are based on current price action. So let's go see what happened to those. Scrolling up, scrolling up, scrolling up. Yeah, maybe I better mute his mic. He'll jingle me back, I guess, when he's ready. Okay, so last night, or yesterday afternoon, we had a short on the S&P, 2862 to 2860. And then we had on the ES to be long 2886 to 2888 to 2896, to the weekly zone at 93.94. Now the entry, now the time you see here, that's Pacific time. In Phoenix, in Arizona, we're on Pacific time 8 months out of the year. So at 8:12 p.m. Eastern, the alert came out to be long 2886, which just happens to be 2 points above, 2 points above the CTA, 2886. Now, remember, one is based on historical price behavior. The other is based on current price action. When you have these two separate methods pointing at the same important price, important area, that always deserves a second look, a closer look, because it's telling you that there's probably a pretty good opportunity on tap. And as we've discussed, two separate alerts pointing you at the same important price, important area. If we drag our line across here, 2886. Okay. Same story once, twice, 3 times. Okay? That's how that works. That's how you use logic. That's how you use Concierge. With the Concierge, my suggestion is that you go to your chart as soon as they come out and put 2 lines in the sand. 1 line on the buy side and 1 line on the sell side. And I'm going to drag that window back up here just in case you didn't get a chance to grab a screenshot if you want one. So you would go to your chart last night at this time, put a line at 84, put a line at 50. At 28.84, you either want to be long and or only look for long trades. And if price gets down to 28.50, you want to be short and or only looking for shorting opportunities. Question from Joe. Enter at 28.84, where's the stop? The stop is where the market tells you to put it. I teach each one of our traders. All of our traders have unlimited access to one-on-one mentoring sessions. You can go to our website anytime you need help, book a session. New members typically will book, maybe a couple sessions a week. Then it drops off to 1 a week, and then 1 every other week. It's just when you need help, we make ourselves available to help you out. And it's during those mentoring sessions that I will teach you the 3-step methodology so that you're always putting your stop not based on a fixed number or formula or percentage, but you're actually placing the stop where the chart tells you it should go. And on any alert, Concierge or Logic, we don't want to risk more than $300 per contract per trade. If you go through the 3-step methodology and there is no appropriate stop loss, $300 or less, then you wait for the next trigger. And the ensuing triggers typically offer you less risk than the first trigger. And that was certainly the case here, and anyone that knows the method, you're looking at that going, wow, what a gift. And it was. So we're blessed people, folks. I'm telling you, we're so blessed. We just want to work really hard and do our very best because we know we're blessed. And to whom much is given, much is required. We want to give all the thanks to Him, and we want to do all that we can for Him. That should be our prayer every morning before our feet hit the floor. Good morning, God. What can I do for you today? It's just a great way to start the day. Okay, on the Dow, the alert to go long, the Concierge, was 24165. Okay, so from 165 we made it up to 316. So 316 minus 165. That's 151 points. That's just this first move right here. Times $5 per point. It's $755, or it was this swing high. That's $755 per contract traded. Then we put in a swing high at 264. And we've got a current high up at 24,650. So 650 minus 165 is 485 points times $5 per point is $2,425 per contract traded. Now, I talked to you about the exit signal as we were looking at the ES. You'll notice on this move, step line is on the left side of blue and climbing. It crosses over. Now, a heads up, you see how we step up and over, up and over. Here we stepped up and then we stepped over, stepped over. That's a kind of a heads up that price may, or that the step line may be making that cross to the right side, and it did. So this candle right here has the potential to be our exit signal. If this candle, which has 19 minutes left in its lifespan, 30-minute candle, 19 minutes left, if this candle closes below the step line, whatever the closing price of this candle is right here, right now, that's the exit signal. Okay? Could you just elect to take profit right here? Absolutely. Over here, that's not a weekly zone. I haven't adjusted these yet, so let me do that. 24895. Okay, so we got a zone way up at 24895, which is the highest weekly zone. $24895 / 24900. That's the highest weekly zone. Now the zone below that is way down at 24035 / 40. So that's a big zone. And we've still got a ways to go. Price rarely travels in a straight line. So off this trigger, from here to here, wherever the exit signal prints. Now again, you could elect to just say, you know what, that's a bearish candlestick right there, even though it's not red, with the wick sticking up like that, and this flat gravestone doji, is that the right term? Yeah, I think so. And so, again, patience, because while it looks as though this candle will close below the step line, we're above blue and climbing, down here on the slingshot, about as bullish as it gets. Now, green lines are dropping. That coincides with the fact that we're, having this little pullback here. Price could recover. Price could continue on its merry way all the way up to the zone. So in a situation like this, you might say, okay, you know what, I've got a nice profitable trade, and I realize that this could do what I just said. Buyers could come in, save the day, keep running it up. So I'm not going to jump out right now, but I don't want to, don't want to give back too much of my hard-earned money, because you may be sitting at a desk and you may be using a computer, but anybody who tells you that's not really work, it is. And according to the good book, the laborer is worthy of his wages. So you could say, you know what, I'm willing to wait and see how this candle closes, if it gives me an exit signal or not. However, I'm not willing to give back more than X number of whatever dollars you might have earned. So you could put in an order here to take you out if price drops here. Because the reality of the matter is, Some news could come out of anywhere. Maybe something leaks out about the Fed announcement today. And in the twinkling of an eye, this red candle could do that, which would set us up for another leg to the upside. But I would rather be out of this trade with profit and re-entering on a new trade when price pulls back to the BVC, and price always reverts to the mean. Just so happens that in our case, the mean is green. Okay? All right. Did we have logic trades that supported? Let me try John's mic again. John, you there?
I think it'll be very, very good. Right now, can we just...
Yeah, he's still talking. Okay. Okay. Charles asked, is risk calculation based on how far the entry signal is from the BBC? No, Charles, it's not. It's not about that. It's about market structure. Okay? And again, that's something that every one of our traders is taught in the training room in the morning, because we want your focus to be on learning the strategy, the actual trade setup. We just use a fixed hard tick 8 stop on every market. But every trade is unique, and so once you learn the core methodology and then you start hanging out with me in mentoring sessions in the afternoon, that's where I'll teach you how to read the chart and how to let the chart tell you where your stop needs to be. Okie doke. So let's move on to the Russell. Russell had a big day, a heyday, and on the Russell, the alert was to consider being long at 1303, and 1303 is right about here. Okay, again, the alerts came out last night at 6:55, so that's 18:55. So let's find the 1830 candle. Okay, so it was on that candle right there that the alerts came out, and then it was on the 1930 candle that it actually triggered. And in this case, price, the momentum was so bullish that as we pulled back to the BBC, it held, and it did not allow us to get back below the trigger. So we only had one trigger. Now, here's a good example of, you get your trigger, 1303, put in a swing high at 1317. So that's 14 points at $50 a point. 14 times 50, that's $700 per contract traded. Now I point out a little double top here on the 30-minute chart, because that's a sign of some pretty good resistance. Now you get an exit signal right, wrong tool. Get an exit signal right there. See how price just barely closed red below the step line. The closing price was 1313.90. So the entry again was 1303. Exit was 1313. So it's 10-point move at $50 a point. $500 per contract traded. Let's say that this candle didn't exactly close below. So you're still in the trade, right? You've had a double top, good resistance. And then look what happens on this candle. Remember, price always reverts to the mean. We don't know when it's going to happen, but we know it is going to happen. So you would have, handed back, pretty fair chunk, because this is, if this hadn't been an exit signal, then this would have been the exit signal, and that closed at 1308. So they would have still left 5 points in the trade at $50 a point, $250 per contract traded. And the swing high of this tremendous rally is 13. The high was 1372. So that's about 69 points. 69 times 50. That's $3,450 per contract traded. Thank you, Russell. NQ. On the NQ, we have a weekly zone at 8870. $70/71. And then above that, we have a zone at 8965 /66. 8965. Okay. And price looks like it ran right up to, nope, came one tick shy. So always remember, zones are an area. We get accustomed to price often turning, right at the zone, turning on a dime. But sometimes you'll come up a few ticks shy. Sometimes you'll spike it. So just always think of it as an area. Even though I give you a specific number to plot on the chart, think of it as an area. Now, on this move, this leg of the move, the step line has crossed over. If this candle were to close red below the step line, that would be an exit signal. John, you there? Let me jingle his phone one more time. I think he's still talking. All right, I heard it ring on his end, so we'll be patient. So the NQ, the alert for the NQ was
Already, listen. Yeah. Yeah, listen, if you've got any other paper.
okay. All right. NQ, consider being long 87.90. And that's right here. Okay. Long 87.90. The swing high. Now, what was the zone below that? 88.70. The next zone down is 86.80. 86.80/81. Remember, all members get these zones before the market opens Monday morning. They're sent out at 6:15 a.m. Eastern. That gives everybody time to get the zones on the charts before Wall Street opens for the day. Now, at that time, we've already been trading, since the Globex Open Sunday night at 6 p.m. Eastern. So this first move takes us from 87.90 to 88.59. So 88.59 minus 87.90. That's 69 points. The NQ pays $20 per point So that's $1,380 per contract traded. Important prices, important areas, almost always tested. So we get back below the trigger, this beautiful little doji here, and then price takes off again, up to the zone. So 89. Oh, I think John just tried to ring me. Hey, John, welcome to the show.
Hi there. Thanks for the invite.
You betcha.
How are
Good
you?
to have you with us. Well, we're doing good. How you feeling?
Better, thanks. Better, thanks, Teddy.
Awesome.
Get back to normal. Yeah.
Awesome.
Yeah. Look, the market really has performed tremendously, and it's continuing to do so. And it's actually. Sorry, can you just give me a minute?
Oh, yeah. Take your time. No, take your time. No problem. Okay, so the NQ gave us a 175-point move. That's what the market did. The market does the heavy lifting, not us. We do our best to point you in the right direction with some parameters, but you got to give the credit to the market for the move. So 175 points times $20 per point. That's a $3,500 per contract move. $3,500 per contract. Now somebody out there is already doing math in their head. We've already talked about what it means to earn the right to trade a certain number of contracts. If you've earned the right to trade 10, now trading 10 contracts just because you can afford to, just because you've got money in your account that will support it, that in no way means that you've earned the right to trade 10 contracts. And you might go, no, my business, I'm a very successful businessman. I've made lots and lots of money. The money that's in my trading account, I earned that money. Yes, you did. And congratulations, by the way. However, you didn't earn it trading. And if you keep thinking that way, though, I promise you, you're going to lose that money trading. Doesn't matter how successful you were in your previous business. You may have been a captain of industry. Trading is a different animal, okay? You've got to learn to think differently. You've got to approach it differently. It's just a whole different ball game. Some people can accept that and just flow with it. Other folks make statements like, well, I'm getting short here, and I'll say, okay, why? And they'll say, well, I mean, look, it can't go any higher. Just give that money to a worthy charity, okay? Because CME, they already have plenty of money, right? Those types of statements, or I'm getting along here. Oh, okay, why? See, there should be a logical reason for everything you do in the markets. That's when I say, okay, so why did you, or if I'm in a mentoring session and somebody's had a rough day and I'm trying to help them figure it out, and I'll say, okay, so now why did you go along there? Well, because, I mean, it didn't look like it could go any lower. The market can always go lower. It can always go higher. It has deeper pockets than all of us put together. And it can stay liquid far longer than any of us can. So you have to train. That's part of retraining. You know, maybe your previous business that you were successful in, maybe you built that business off of your gut. You know, you've got certain instincts about the steel industry or the Tupperware business, or, you know, whatever it was that you did. You know, maybe you built that business based on your gut instinct. That's fine. I've not met a lot, very few, I can't even remember the name, of a gut trader that ultimately succeeded in the markets. You need a definable edge. And even with a definable edge, a good, hearty, healthy, wholesome definable edge, you're still going to get stopped out. And that's again where some folks who've been very successful in business over the years can't handle being stopped out, because that would be like, losing the bid you had in on some big contract, or it represents failure, and nobody likes being a failure. There's this instinctual thing in us that we want to be right. How many times have you been in an argument, and at some point in the argument you realized there was a flaw in your thinking or your reasoning, but you still couldn't back down because, doggone it, you're going to be right no matter what the cost. That's a surefire way to empty out your trading account. So, yes, you need to learn the definable edge. Yes, you need to learn how markets work. Yes, you need to learn how to trade. But for many people, you've also got to learn how to think like a trader so that you can behave like a trader. Otherwise, you'll be the 9 out of 10 versus the 1 out of 10. We all want to be the 1 out of 10. Now, I'm very thankful to be able to say these numbers do not apply to CFRN. Absolutely do not. Why? Now, I'm also not going to pull your leg and tell you that 10 out of 10 succeed, because that wouldn't be true. I will say this: those who apply themselves, who show up for class, who show up for the workshops, who actually ask questions, who book mentoring sessions, and then actually do what we teach them to do, there's a very high probability that those folks are going to succeed. No promise, no guarantee. No one can promise you that. No one can guarantee you that. And anytime somebody tries to sell you a method or a strategy that guarantees your success, man, you need to run. Because they're not interested in teaching you how to trade. They're just interested in getting into your pocket. So, now, we're not the only people who can teach you how to trade. But I'll tell you this: the number of people who are actually willing to spend one-on-one time with you and sort of hold your hand on this journey, okay, to finding your place in the trading world. We're not the only ones, but there's not a lot of us out there. There just isn't. Go Google, you'll find out. There's a million places that'll sell you indicators, sell you strategies, call out trades in a room. I'm talking about people who will actually, step by step, do their very best to help you become an actual trader. So, our doors are open. Our methodology, our strategy is available, and we've kept it affordable. Make no mistake, this is a business, okay? It's not a charity. The laborer is worthy of his wages. You're going to pay for an education one way or the other. Now, paying for an education up front, that increases the probability of you actually becoming a successful trader. It's not a guarantee, but it at least gives you a higher probability than the other way. And the other way is, I'm just going to keep throwing money at the market until I figure out something that works. That can take years. It can cost tens of thousands of dollars. And there's no guarantee that you'll ever figure anything out. Okay? So if you don't get your education from us, find somebody trustworthy that will, in exchange for money, teach you how to trade. Now, we do something kind of unique, I think. When you take a trial with us, not only do you get to come to class every day, have one-on-one sessions, you get to use our indicators, our platform, all that stuff. You get to hang out in our discussion group channel where you can carry on a conversation with traders who have learned from us, who are a part of the family now, who are actually doing okay. You know, it's a journey. And yes, I know that lots of sites have these powerful testimonials. Hey, we got testimonials, sure. But haven't you ever wondered sometimes who wrote that testimonial? I'm sure you have. And I'm not saying that all the testimonials out there are bogus. I'm sure there's plenty of legitimate ones, and there may be a few, you know, illegitimate ones, or maybe somebody got paid to say something. I don't know. I don't know. So I'm not knocking testimonials completely. I'm just saying, you know, be cautious. Just because it's on the internet doesn't always mean it's true. But when you're actually put in an environment, see, we're not afraid to let you talk to people who have gone through our program. We actually encourage it, because that's the quickest way for you to find out if what we do is actually right for you. Okay? Just like not everyone's...
Sorry about that.
Yeah, that's okay, John. No, glad to have you with us today.
A piece of equipment just went down. It failed on me just temporarily.
What did?
Piece of equipment.
Oh, sorry to hear that.
Yeah.
Oh, our member bought that computer, the one we were looking at the other day.
Yeah?
Yeah, he bought it. I haven't had a chance to talk to him today. Well, I think he's supposed to pick it up today.
Okay.
But he made an agreement with the guy over the phone to buy it.
Yeah, actually, I haven't done it yet because of all this drama going on, but once things settle down, I'm actually going to put 2 new drives into these machines, because according to one guy who's a computer whiz, he says that the solid state drive that I've got in there at the moment is kind of the bottleneck, if you like, and he thinks that that's why the machine isn't performing as it should. I mean, it's performing okay, but it's not blindingly fast like I thought it was going to be.
Right. I think my solid state drive, and I could be wrong, but I think the purpose of my solid state drive is just, it's used during the boot up process. But I think once I'm up and running, I think the workload shifts to the other, you know, just the standard type of drive.
Yeah, that's probably, mine is all solid state all the way through.
Oh, you're, okay. All right, yeah, well, that's supposed to be blindingly fast, you're right.
Yeah. Well, apparently the one I have is not up to it. The one to get is a Samsung. I think it's a D75 or something like that. It's 7 times faster than any other solid state drive.
Have you updated the drivers for the one that you have now?
You know, that's a good question. I'll have to look into that tonight.
Did you say Samsung D75?
No, I don't have that in yet. That's the one I have to put in.
Right, I just wanted to bring it up and take a look at it. Samsung, well, that's must be a different number. That comes up as a digital camera.
Try E75 maybe.
I'll try that.
No, one E. No. Just put 75 drive there. That
Yeah,
might
there you
do it.
go. Or how about SSD? It is a solid state, right?
Yeah.
Let's see what that brings up. Samsung.
It might be a 95 actually, or 85. EVO. That's.
Got an 86 EVO. SSD 850. 850. Well, that seems to be the most popular one.
That might be the one. No, this one's about $300. It's a.
Okay.
Well, maybe try googling fastest Samsung solid state drive.
There you go. Fastest Samsung.
$970. I think it's the 970. That's the one.
Okay.
Yeah, I think that's the one. Yeah.
Okay. So this one, they're looking for
Come down in price.
$180 on that one.
Yeah.
The SSD that goes further. Accelerate into next-gen computing, delivers breakthrough speeds, best-in-class reliability, and a broad range of capacity options up to 2 terabytes. The latest VNAND, new Phoenix controller, and intelligent turbo-write technology. So, that sounds like a pretty good drive.
Yeah.
So
I'm hoping it's going to make all the difference. If it makes all the difference, I mean, if it really does speed it up by that kind of factor, it's going to be pretty incredible. So,
it looks like it's got some pretty clever software to control it.
They make computers for Intel, for God's sake, and Microsoft and the White House and the Defense Department, everybody, and they're telling me
Samsung does.
No, the people who built my machine.
Okay, gotcha.
And they told me that my machine's the fastest machine they ever built. So that's really saying something.
Yeah, that is.
It's not performing quite as well as I thought, but still, I think it's a hard drive problem. So.
This person who wrote a review, to be honest though, the SSD could boot up in under 30 seconds. Yeah. And the NVMe
Did a book come out just now? Did the blue
15.
book or something just come out? Because the market's selling off.
No, John. At noon we have the Fed announcement. Let me get a chart up. The ES.
I'm kind of expecting this because I think stocks are very vulnerable to a downturn here actually right now.
Okay, well, we're looking for support at 29.16, and if that holds, then we'll look to be long back up to the area of this swing high. I don't see. I see a breaking news. Fed pledges to keep rates near zero until full employment, inflation come back. I don't know if that's what created this. I'm not
might have just done it. Might have done it actually. I like the idea of keeping the interest rates down until full employment is back. that might be a long time.
Yeah. Let's see. Here's the article. Wait a minute. Why is this saying Federal Reserve leaves rates unchanged till economy? What's the April 29th? 2 p.m.
2
Eastern.
p.m. There you go. Yeah.
Oh, you know what? I still haven't adjusted to the time change. I'm used to it being at 12 noon my time, but the Fed announcement already came out. And Karen just typed in. We had a Fed announcement. Yeah, and so in 15 minutes we'll have a press conference with the chairman. Man, I was off by an hour. We just talked about it at the beginning of the show. The Federal Reserve painted a dour picture of current conditions and pledged Wednesday to continue its historically aggressive policy stance until it is comfortable that the U.S. economy is back on its feet. Following this week's FOMC meeting, the central bank said it would maintain its current interest rate target between 0 and 0.25. Ongoing public health crisis will weigh heavily on economic activity, employment, and inflation in the near term and poses considerable risk to the economic outlook over the medium term. The commitment was stronger than most market participants expected and represents a pledge to hold rates near zero and keep them there until full employment returns and inflation gets back to around the Fed's long-stated 2% goal. There was no expression in the statement that the Fed feels confident about what its moves will lead to in terms of economic growth. Instead, the committee said it will continue to monitor conditions, including public health, global developments, inflation, and will use its tools and act as appropriate to support the economy. There was no mention of the pace of bond purchases. You need to get that?
Yeah.
Go ahead. Called into action to halt a market freeze and economic collapse from the coronavirus, the Fed enacted 2 emergency cuts that brought short-term borrowing rates back to where they were during the financial crisis. In addition, officials announced 10 separate programs aimed at providing market liquidity and getting loans to businesses and consumers in need, several of which are yet to be implemented. In assessing the current state of affairs, the committee noted bleak conditions across multiple sectors of the economy, tremendous human and economic hardship across the U.S. and around the world. The virus and the measures taken to protect public health are inducing sharp declines in economic activity and a surge in job losses. Weaker demand and significantly lower oil prices are holding down consumer price inflation. The disruptions to economic activity here and abroad have significantly affected financial conditions and have impaired the flow of credit to U.S. households and businesses. And guys, in 13 minutes, Chairman Powell will hold a press conference. So this is not an incredible amount of volatility for a Fed announcement at all. Let's see how it's affected gold. Well, gold caught a spike to the upside on the announcement. But if we close, if we were to close just as we are, just as we sit right now, that is a beautiful candlestick signal to be short the market. In fact, I need to send out an alert here. And I'll share with you what it is. On gold, okay. Okay, so we're going to be looking short 1714 with a target of 1713, target of 1712. And we've got a weekly zone at 1718. These are last week's zones you see on the chart. So there's, make that 17. And we'll make this 18. You back? You back, John?
Yeah, selling off on a Fed announcement. No, he's going to come on.
Yeah, Powell will be on here in 11 minutes.
Normally when he's on, sometimes the market goes down, and then if it rallies late after he's finishes speaking, I would consider that to be a good thing, a positive. Probably will happen. And if we continue, look, remember I said morphing into May is a really big deal, and since we're having the best month since 1991 or somewhere, it's pretty it's 2002 and 1991. The likelihood of continuing higher into May is very real, and the virus is running its course as we thought. I think my prediction several weeks ago that we'd go up about 100,000 recoveries per week has actually been exceeded. We're closing in on 1 million people recovered, and if you throw in China's 3 million odd, that's probably 4 million people who recovered from this worldwide. So that's pretty incredible. That it's not as bad as was thought, and very good chance. I mean, it's just unbelievable the way Australia has managed to get this thing under control, and New Zealand as well. And I was talking to somebody in Australia actually last night, and he told me that it's really their immigration system that kept people from coming in with this virus.
Mm-hmm.
So they have very
tight. I heard
space.
that as well.
Yeah.
You know, this almost feels like some kind of social experiment, as if, you know, this. Now, I know real lives have been lost, and I don't want to make light of that in any way whatsoever. But this feels like a manufactured crisis.
No,
like
it
a
is.
dress rehearsal.
It's almost like a boondoggle. You know our friend John McAfee, right?
Mm-hmm.
He's running for president. McAfee 2000, I think, is his website. But he says that every hospital, you know, maybe there's some kind of a deal with the hospital and the government, you know, from the original. Remember the 8 billion, the first 8 billion they got passed.
Mm-hmm.
I think they probably made a deal with the hospitals to cover all the patients, you know. So they get $39,000 a patient.
They get how much per patient? McAfee 2000. Huh. Let's just search McAfee for Prez. It's McAfee 2020 HQ. Now, this guy made a lot of money off his antivirus software, but I got to tell you, when it first came out, I liked it because I didn't know any better. But then once I got it on my machine and realized that there was better products out there, getting it off my machine was a challenge. And they say, my computer guy says, and I defer to him because he knows that that's what he does for a living, so I trust his judgment. The way Windows 10 is built today, if you install the updates as they come out, running any type of antivirus software on top of what's built into Microsoft these days just creates conflict, and you're asking for trouble. So I've trusted him on this. The only thing I run other than what's built into Windows is Malwarebytes, and it runs a scan, you know, every morning about 3 a.m. Eastern when the computer's not being used for other things. So, okay, John, you're back.
Malwarebytes is pretty good, isn't it, Wayne?
Oh, it's great, yeah. So I run that, but I don't use any other type of antivirus. I just lean on the stuff that's built into Windows. I think they call it Windows Defender.
Uh-huh.
I use that in conjunction with Malwarebytes, and by the grace of God, I haven't had any problems. So, I mean, there's no real chance that, I mean...
so he's saying that every patient they get $39,000 for. So that's why they're throwing in all the everybody's
every toe tag gets COVID put on it.
Exactly.
Yeah, that's just wrong.
And you know, there's a lot of probably bonuses and things are riding on everybody keeping quiet about it. You know.
Yeah.
So.
Could you imagine this character being in the White House? Oh my goodness.
It'd be pretty wild. He'd probably bring his guns with him, you know.
I mean, I realize he doesn't have any realistic chance, but just the thought of it is...
He's a very flamboyant character.
He is. Sure. Flamboyant, yes. He defines flamboyance.
Yeah.
Gilead attempting to recover
Yeah, we talked about that yesterday,
Mm-hmm.
and it's certainly curving up. And I just think this company is, it's just, its destiny is, it's going to go higher, and they're probably going to run this thing up at least to $130 before it's over. And there's a little company called VBIV. You should want to keep an eye on.
I heard yesterday there was a guy, I think on CNBC, who said there's some kind of heartburn remedy that they think early clinical trials have said that this could potentially have some impact on the coronavirus. I don't know how those two relate, but it looked like the folks, if the image they were showing on TV coincided with what they were saying, the voiceover, they appeared to be getting this intravenously. Now, I went through a period in my life where I suffered from indigestion, heartburn, and I took that real popular medication. Maybe, is it Prilosec? I don't know if that's the right name, but I took it for a while, changed my diet, the problem went away, so I no longer, it was an over-the-counter kind of a medication. But and I'm not a man of science by any stretch, or medicine. So just the thought of a heartburn remedy, if Huey's here, he might be able to shed some light on that. He knows a lot about the medical field. Okay, so let's go back to our recaps. We've covered the ES. In 3 minutes, Fed Chairman Powell is to begin his press conference, his Q&A session. Now, our highest weekly, we've got one more weekly trading zone overhead on the S&P. And from where we sit right now, that's about 60 points, which is equivalent to 600 Dow points. Now, every one of our traders, every one of our passport holders, and everyone on a trial, everyone got this alert, these two alerts, last night. Okay? So we put everybody on a level playing field. Now what you do with the alert, once it's in your hands, of course, that's up to you, because it's your trading business. We can't tell you how to run it. We can make suggestions based on our own personal experiences, but beyond that, you have to call the shots and make the decisions. And we talked about, we talked about this candle could potentially give us the exit signal, but it didn't, because it didn't close below the step line. However, with a major economic event coming up, and I apologize that I'm still adjusting to the fact that I'm now 3 hours to the East Coast versus 2 hours. We just came out of that 4-month period where I'm 2 hours to the East Coast. So, if you were long this move, at the swing high, it was $2,900 per contract. Now, if we close red in 1 minute, 30 seconds, whatever the price of this candle is, that will be the official exit signal. So let's just watch it. We've got 10 seconds to go. Now, of course, could you just say, man, I escaped all that. I'm very happy with what I have. Okay, there's the new candle. All right, so the closing price of this candle, $29.32.50. $29.32.50. Exit signal. Okay. All right. So if we take 29.32.50, 29.32.50 minus the entry, 2884. That's 400 and... No, I'm sorry. It's 48.5 points. 48.5 points times $50 per point is $2,425 per contract traded. So, from entry to exit signal, from the entry to the exit signal equals $2,425 per contract traded. The entry to the exit signal, $2,425 per contract traded. Okay. From the trigger, and based on our methodology, I'll just tell you this trade would have required about 5 points of risk. You could be generous and give it 6. Okay. Now, for the trader who has been patient, who's willing to sit through the class every day, that boring, same thing over and over and over, and that's how we created it. That's exactly how we want it to be. We want it to be just so repetitiously boring that you get it, and then you can check in whenever you want to, hang out whenever you want to. But the goal is that we get you to the point where you don't really need us. We give you all the tools. We teach you to see the market the way we see it, how to think the way we think about it, and then how to do what we do. Now, for the trader who's been with us for a while, who's been patient, who showed up for the classes, who realized it wasn't a spectator sport, but they actually got involved with their learning process. They asked lots of questions. And they then took the answers to their questions and they put them to work. They actually did what they learned, and pretty soon the blueprint gave them the green light to go live. And then to add a second contract, and then to add a third, and then to add a fourth. And time flies when you're making money. For that person that was willing to subject themselves to learning the process step by step, from the entry to the exit signal, the 10 contract trader, it's a $24,000 move. From the entry to the exit signal. Am I being overly dramatic here? I hope so. Because what I want to drive home is not the ability to make $24,000 off of one trade. What I want to drive home is the importance of learning the definable edge that we're willing to teach you. Putting in the time necessary to learn how to understand how markets really work, how to read the chart, how to translate that information into action. That's the point I'm trying to drive home. And let me say what I said again. Let me say what I said before again. Just because you have money in an account somewhere that allows you to trade 10 contracts does not mean you should be trading 10 contracts. It's a surefire way to get yourself up the creek. Been there, done that, got a closet full of the t-shirts. Okay? I don't want that to happen to you. So if you can be patient, if you can show up for class, if every time someone says something that you don't understand, it doesn't compute, it's not logical, it doesn't seem logical, say, whoa, hold on there, bud. I heard what you said. English is my first language. I have no clue what it means. We're happy to slow down and explain to you whatever it is we're trying to convey. You have available to you what in previous times I honestly don't think any traders had available. And I'm not patting myself on the back, I'm patting God on the back, because it's by His grace that we're able to do anything that we do, understand what we understand, by His grace. I don't know of an organization who's ever done exactly what we do in the manner that we do it, with the day-by-day education, support. I mean, we're literally on call 24/7 because we have traders around the world. So that Telegram channel, always open. The discussion groups, always open. And because everybody learns the same thing, when I'm not around, Valerie's not around, Michael's not around, if you post a question in that discussion group, there's a good chance that one of our traders somewhere around the world will be awake, and they're qualified to answer your question based on what they've been taught. Because again, we teach everybody the same thing. Okay. All right, let's get this thing wrapped up. We know about the S&P. We know about the Dow. We know about the Russell. Do we know about the Russell? Yeah, we do. We figured it out. It was 1303 to 1373. So that's 70 points at $50 a point, $3,500 per contract traded. Yes, for the 10 contract trader, that's 35 grand. But don't be tempted to trade contracts you've not earned the right to trade. Just be patient. Take it one day at a time, one trade at a time. Understand that on this journey you will be stopped out. It's not a conspiracy. The market's not out to get you. Being stopped out is as much a part of trading as breathing is a part of life. And you've got people to support you. We're all on the same team in the discussion group. Unlike some message boards out there that I've visited that weren't very pleasant places at times, no one's trying to outdo the other one. You know, there's no ego trippers. It's actually a community of really nice people who, if you're struggling or stumbling, they'll pray. They'll say, "Brother, can I pray for you?" Where else are you going to find that? I don't know. I'm just so thankful and feel so blessed that God allowed me to be a part of this. It's exciting. It's awesome. It's an adventure. And you're invited to join in. Okay? You're invited to join in. All right. I don't think we've looked at Crude yet. The alert last night for Crude. I'm going to find it. I found it. Okay. All right. Crude oil. Consider being long 1845. 1845 was in here somewhere. Let's find it. 1845. Okay. So, let's jot that down. Okay. So if you go long 1845, the swing high was 86. 86 minus 45 equals 41. So that's a $410 per contract move. Now, we got a weekly trading zone up at 1970/75. 1970/75. And then below that is $18/1805. Okay. And then below that is $16.90/95. And this takes us back to Sunday night. Remember the zones, these zones went out to all of our members Monday morning, 6:15 a.m. Eastern. So here's the Sunday night Globex Open. Right there. The highest weekly trading zone this week for crude is 2250. So way up there. So from where we opened Sunday night, we traded down to that zone. We traded down to that zone. Back up to the zone. Back down to the zone. Back up to the zone. And that brings us to where we are right now. So that first trigger, 1845, we just went over that one. And then every trade has a final trade to target. In this case, 1845 to the zone overhead, 1970. So that's about $1,300 per contract traded. For the 10 contract traders, 13 grand. John, is that you? Okay, I thought
I'm back. Sorry about that. Yep.
Okay, so yeah, I was just asking the audience, or Huey, because he knows a lot about the medical field. Presumably Pepsid, and that's a heartburn medication, acts as a decoy to keep the virus occupied, preventing it from reproducing and spreading throughout the body. Because I brought up that I heard last night that somebody was doing a clinical study on some heartburn remedy, and I was asking, does anybody know how this works? And he's already logged out.
Yeah, that's it. It's kind of the key in the lock situation. It's like it prevents the virus from binding with it's a protease inhibitor kind of thing. It's kind of like the AIDS drug, same sort of thing, protease inhibitor. So listen, if you can, pull up the chart of MESO, MESO.
Sure.
Look at that.
Wow.
This is an Australian company, and they have some kind of a treatment that they're using in Australia right now for this virus. And it just like came out of nowhere, bam, right up to $20. You might want to put up INO, the vaccine. I was just talking to somebody who's long the stock a minute ago.
Okay.
And look, this I would call this Innovia little engine that could, because against all odds, it's come back from a pretty dramatic pullback, and it made a beautiful turn here. I call that bottom actually right on the money, and it's been going up ever since. I made 80% in one day for some people on the first run up.
Good job, John.
They were a bit late to the game. They got in at 10 and sold it at 18. But I got the second run. We've basically doubled our money on this second run up so far,
Nice.
which is not bad
Yeah, that's
in the
great.
same stock. But I got a feeling that we're getting ready for a run higher, possibly the 25. And look, there's a lot of risk in this stock, as you can tell. So you have to be, this is not for the faint-hearted. But what I would try and do is to have some exposure to the upside of this thing. Obviously, anybody who's gotten in lower doesn't have any real risk because they can put a stop or something on it they want. But obviously, getting in at this level, the risk is much higher. But if you can buy pullbacks and try and get some cushion, behind you, that's the way I would try and play it. I certainly would be a buyer of a green candle. There's no guarantees a green candle is going to continue higher, but it's a better situation when that happens.
Yeah,
So
that's something I always teach is, never sell a green candle. Never buy a red candle. So
yeah. So maybe you want to wait for that. But we could gap up easily to 18 or 20. I think Inovio, look, you got to ask yourself, it's really tough trading a stock like this, obviously, because of the way it's been carrying on.
Sure.
I mean, you had that first run up, and then, which was a big deal when it happened, right?
Right.
It's basically a double, and then it came back, and then then next thing you know, you have this explosive move up, and then it comes back. And now you've got a more orderly run-up, which I think is actually a positive. It's not so, dramatic, if you like. It's not like a bear. It's less of a bear market rally that gets sold to being more of a bull market type, run-up, if you like. So I think that's a good thing. Also, if you put the weekly or monthly up, you're probably going to have a really sensational-looking weekly and monthly profile.
Okay, there's weekly.
Obviously, the weekly bar is a problem at the moment, but if it consolidates,
That's called
within,
dark cloud cover in Kendall speak.
Right. If you go to the monthly,
Okay, monthly. There we go.
you start to get a better perspective on how this
that's a
whole
little more
stuff.
bullish there.
Exactly. So, if we were lucky enough to close at 16 or higher by tomorrow, it's really going to start making this thing look like it wants to take out that previous high and get up to 24, 25, maybe even 30. If you get through 20 on this stock, it's almost like that previous spike becomes support. And you could really, it's just like some of these other vaccine stocks that were like Inovio and went up to 30, 40, 50, 60. I mean, put up VIR, for example.
VIR, okay. I just had a news flash come across on my phone. It says airborne coronavirus detected in Wuhan hospitals.
In Wuhan, where?
In Wuhan hospitals. I've got to
Hospital
plug my phone in, and I got to plug my phone in so that I can get a.
You know what? INO is moving up as we speak. How about that?
Is it okay? Now you'd asked me to put up another chart. Oh, Huey, I see you're back. Huey, I shared your response with the audience about Pepsid. He goes on to say, Mesoblast using stem cell therapy in a study for COVID-19 patients. Remestem cell is the name of the drug. Results have shown 83% survival with 2 IV infusions of the experimental drug. The drug is under priority review by the FDA in the USA at the moment. Thank you so much for sharing that, Huey.
Okay. Now,
So
look,
what chart did you want? I'm sorry.
VIR.
VIR. Okay. Now, this article that
Yeah.
popped up on my phone.
I
Go
mean,
ahead.
look at the way this thing went up to 70 plus. It's pulled back a lot since, but it's not inconceivable something like that could happen to Innovia. And they, in my view, they're certainly in the top 5 contenders to have a vaccine out possibly faster than anybody else. That's really, they're in a race against time. And they put out a news last night that pushed the stock up that was pretty positive on progress with the study that they're conducting right now. In the same way that Gilead went up $8, if Innovia came out with some good news next week, it could easily jump, it could gap up $10 just like that. So I think you have to just trying to maintain exposure to this if you want to be in that sort of a, take a shot kind of thing. mRNA, if you could put that up.
MRNA.
MNRA, I think it is. Is it? Maybe, sorry, that's the right one. You got it. Sorry.
Moderna? Okay.
Yeah. Same story. I mean, look, Moderna's come off. It's interesting because Moderna's come, $10 back from the high, while Innovia's gone up. What does that tell you? People have more confidence in Innovia right now than they do in Moderna. In terms of possible results. So, and that's kind of been my view. I think Moderna was very lucky. It kind of got a jump on everybody, and it had a very good run up. As a result, it probably had some pretty powerful backers who really ran the stock up.
Who manufactures this remdesivir? How do you say it?
That's Gilead. That's Gilead.
Okay, because this morning, Fauci said that an experimental drug for the coronavirus has a proven benefit. The data shows that this drug has a clear-cut, significant positive effect in diminishing the time to recovery, according to Fauci. The data he referred to is from a large study of more than 1,000 patients from multiple sites around the world. Patients either received the drug or a placebo. The results from the clinical trials are typically published in medical journals after review. That hasn't happened yet with this latest study, but Fauci said that the results were so promising that there's an ethical obligation to immediately let the placebo group know that they can have access to the drug.
Well, you know what? We predicted exactly your words about 8 weeks ago on this show.
I recall you talking about it.
Exactly that. So
Yep.
everything we thought would happen is actually happening. Not quite with such a dramatic result as what. Remember, the first time this ever happened was with Intercept, when it went from 50 to 65 in one day, and then that night it was up $100 the following night.
Mm-hmm.
Well, sorry, the same night, the same day. In other words, it was up 65. Next thing you know, it was 165 after hours, and by the next day it was like 220 or something. So it was a really, really, really dramatic development.
There's one more sentence in this press release that I think's important. Fauci said that the folks in the study group who actually got the real medication were able to be discharged from the hospital within 11 days on average, compared to the people who took the placebo. On average, they were released from the hospital in 15 days. But in both cases, everybody got better.
Yeah, look, this isn't the what's the word? The cure-all by any means, but it's.
Well, it's
it's
back
got
to my
some
opening comments, with you and at the beginning of the show, that, yes, real lives have been lost, and I'll never make light of that in any way. But the way the media has spun this thing, I believe, in an attempt to damage Trump's potential for being reelected to a second term that I believe he deserves. Wow, this is a big thing,
Well, look, you're dead right, Dwayne. The problem is, they're getting similar kind of a thing with the hydroxy. And by the way, I've mentioned it on this show. Have you? I'm pretty sure the answer is going to be no. Has anybody out there? Sometimes you've heard the expression, solution could be staring at you in the face, right?
Mm-hmm. Yeah.
I've taken Tamiflu, and it's pretty good at knocking stuff out. I'll tell you.
Mm-hmm.
I actually talked to a fella in Phoenix or in Arizona, somewhere in Arizona or New Mexico,
mm-hmm.
and he was telling me, we were discussing this Tamiflu, and he says, "Oh, be careful. My son took some, and he was throwing up from it."
Mm.
So I was pretty careful when I took the first tablet, pill capsule, and took about half of it. And it does definitely, you do get a bit of an effect from the first one or two pills. But after that, there was no side effects whatsoever for me, thank God. And, this is look, anything with a veer on the end of it, I think, logically probably has some merit in battling this virus. Okay. And I've said that from day one. I talked about.
I tell you, I'm really intrigued by the one where they're trying to fool the virus. This heartburn remedy. That's just so clever. Yeah.
Yeah, and it's great that they found. They found it out because people, when they looked at the medical records and they found that people who were taking it were not halfway as badly infected as the other people.
Mm-hmm.
So that was a big deal. And look, there's some people they were giving 2,400 units of vitamin C by IV in China, and that was working. So but the solution could be staring it in the face, because the FDA approved a thing called Xofluza. You've heard me talk about it on the show numerous times in the past. Nobody's mentioning that at all, and that's something that the modality is. You have to take it as soon as you get the symptoms. Now, I certainly would do that in a heartbeat if this thing came my way again, because I might think I already got a hit with it once or twice. And listen, it wasn't once or twice, it's 4 times. The thing came back 4 times. Whatever I had, it came back 4 times. And it's not fun.
And you don't know for sure. Yeah, did you actually take
the doctor that treated me, she said that my lungs were basically giving those symptoms of this thing. So that's why we acted as quickly as we did to try and knock it out. And look, each time I was able to knock it out, but the last time hit me the hardest. And it really, it's taken about a week to get over it. And I was really feeling terrible, just diabolically bad,
Oh yeah, for you to miss the show a couple days in a row, I knew it had to be bad.
Yeah, because I don't, so I haven't missed much.
No, you're a hard worker, so I knew.
So
I knew, this. So that's,
but yeah, so I got to tell you, I'm feeling, like dramatically better today than I have in quite a while. So I actually was like almost pulled an all-nighter. I was working on stuff all through the night, so I really kind of a lot of energy coming back.
Good. That's great.
But
well, continue to get rest. Don't push yourself too hard.
Yeah. So, look, the keep in mind the other big opportunity that's coming is at some point the metals are going to run. Platinum, has been a very difficult market to trade. We've called most of the lows in platinum. I think we called it last time, one at about 725. And it just shot up here in the last few days rather sneakily, and it just hit 800. Now we're a long way from 1,000 still, but the fact that we got back over 800 and the silver actually is up as well with the gold being down, I consider that to be a positive. What you've got to watch for now, possibly going into Thursday or Friday, especially with the end of the month, is whether we're going to get a late pop in gold and silver or not.
There's silver monthly.
It doesn't look like it at the moment, but I do believe that we're going to make some sort of a bottom here in the metals in the next few days, possibly, or sometime in May, and we're going to have another run up, possibly up to 1900, maybe even over 2000. But the big picture, you want to start, this is the sort of thing where you put this on your mirror with a post-it note or on your fridge, $8,750. And the reason I'm saying that is because that's, in my view, that's where we're going in gold.
Wow.
And I've said this before on the show, if, you've got to start thinking. Look, you and I, we've talked about, I can't even remember when I came out with a target price of 33.50 or so, or 30, I think it was 33.30 to 50 on the S&P. A year ago, 2 years ago, it's a long time ago, and it happened, and that was within $50 of the top. And I believe more, just in just the same way. Look, I laid out before this audience in January and February, mother of all trades, TVIX. I even said ahead of time I was a 6 to 16 times upside potential. It was at $39, and a lot of people took my advice. Some people got out of the market. Some people took this trade. It ended up being a 26 bagger in 1 month exactly. And one billionaire I know has made $3 billion cold out of that trade. He had 3 million shares, and basically got out of them close to $1,000.
Well, he should send you something nice for Christmas.
So I've got a few favors coming my way, so we'll see. But anyway, the fact that this trade was conceived, and not just conceived, but was brilliantly executed by somebody as well, and possibly one of the greatest trades ever made, is really an incredible compliment. And all I'm telling you is just focus on this number, 8,750. Why is that my number? And this is something I've had figured out for the last 4 years. The reason why I got to say you got to think in those terms is because the virus has taken a wrecking ball to any hope of the U.S. economy. We probably talked about it on this show, where Trump probably came in with the idea. He did something that's never been done by any U.S. president ever. He basically kicked off his term with a vengeance, and got the economy going from day one. The market basically led the way higher to just sensational performance. Nobody can take away the fact that we had nearly 160 million people working, all-time record employment, and all-time almost, actually technically speaking, we were hitting all-time record lows in unemployment because the previous figures, were based on a smaller economy and, by every measure conceivable. And this was written about extensively in Forbes as far back as 2017 or 2018, that, technically we were all-time record low unemployment, just like across the board, even technically below the 2%. And if you remember, I explained that because the unemployment claims, right, are 200, we got down to 198 or something, right? And if you extrapolate that out to where we were when we were at 2% unemployment or 2.5% in 1951, based on the size of the economy, it was like unemployment claims being 200, it was the equivalent of unemployment claims being less than 100,000 today. Okay, so it's a record, no matter which way you cut it. So we were gradually sort of getting to a point where the economy was growing to the point where we were able potentially to start paying off the debt in the future. That's out the window now. That's impossible to ever come back from. And I hate to say this, but right now, the debt clock of 2024 is potentially predicting either some kind of a disaster in the future that we don't even know about yet. Mm-hmm. The second hit that I think we've talked about is coming. or a Democrat win in November, because the employment numbers that they're putting in there today are diabolically, they're just terrifying compared to where we are today or where we were a few months ago. So that, and look, you when you get people like Frank Holmes is probably the biggest buyer of gold in the world, gold companies. He runs one of the biggest gold, funds. And I don't think I've ever heard this guy talk about $2,000 gold. Even in 2011, when everybody thought gold might go to 2,000, he was kind of a cold, putting cold water on the idea. And Lassonde, who's worth $1.5 billion or something, he's a very accomplished guy, knows the gold market inside out. Look, Frank Holmes is talking about $10,000 gold, not 10,000. Bank of America is talking about 3,000. I actually think we'll be able to show people some charts when we do some more work in this in the next few days. But in 2009, the stimulus level was enough to cause gold to triple from 2008 now, I should say, from 2008 through 2011. It basically tripled, right? And the silver price tripled over the same period. If it's not just double the stimulus this time, it's actually triple the stimulus of 2009 already. More like to the power of 10, really, when you look at it. And it hasn't happened over a year or two like in 2009. It's been crammed into a quarter, less than a quarter. Okay. So there's been a force of money pushed into these markets like you can't even fathom. And I believe that is going to manifest itself in higher gold prices very soon and possibly very suddenly, in a way that will leave people breathless down the road. We're probably going to go into I actually think it's going to be a two-phase sort of event. I think we'll get up above 2,000 and possibly run up to either 3,400 or possibly 5,500. Then we might pull back for a while, somewhere into the 2-3s. And then I think we're going to have a second run that's going to take us either to 8,750 or 12,000 or even 20,000. It could be any one of those numbers, but I think a target that is realistic and not a stretch. And why do I say that? Because if we turn the clock back to 1976, right now, today, and I said to you, gold is going to go up eightfold in the next 4 years, you have a hard time even thinking about it today. I mean, most people dismiss that as being impossible. But the fact of the matter is it happened in 1976 through 80. And actually what happened is very similar to what's happening today. We spent 3 years going up from what was then $104.6 to about $235. By the summer of 1979, we were still about 250, maybe even 235. And it wasn't until the fall, September, October, November, that gold suddenly took off. And before you knew it, it was 875 by January the 20th of 1980. I think I told you this story before. I seem to be blessed at finding myself in places or meeting people where big things happen. I met a guy who kind of was the Australian version of Bill Gross. He was a card player, and he was a kind of a genius trader. And this is where I started to understand the possibilities in markets that ultimately led me to not only participate in this venture, not to the extent of the people I'm about to tell you about, but I did get a look in on the upside that was pretty riveting. And as you know, later on, I ended up breaking my own world record. So it certainly, you gotta, just the same way as every trade you put on, you have to give, you have to really, give it all the room in the world to deliver, and you have to, and if you're on a mega trade, you have to stay with it. You have to stay long. So what did this guy do? He took 20,000 from 15 different people. And, in about a year, he turned that 20,000 into 1.6 million. Mm. And that was when 1.6 million was a lot of money. It was probably worth about 10 million today. It was absolutely stunning performance. And he basically kind of pyramided up as the gold market went higher. So here we are today, we're at 17, 17 right now. We've got about 6,000 bucks to get to 8,750. That makes the the $400 ride in 1979 like a picnic compared to the possibilities that are ahead of us. So this is why you got to put on your fridge and your mirror, that number, so that you're focused on it every day. You're thinking about it, and you've got to be trying to buy dips and position yourself, or use Dwayne's methodology, whatever works for you, to maximize on what's coming, because it's coming no matter what. The world cannot continue on without this happening. It's beyond compelling, because ultimately when money is pushed into the system, the dollar is actually close to breaking down here, and I don't know whether its time has come yet.
Well, Powell is still holding his press conference.
Sorry?
Powell is still holding his press conference.
Yeah. So, look, can we look at the dollar actually today?
Yeah, absolutely. Okay, that's on a daily chart. Did I lose you, John?
No, I'm here.
Oh, okay. Yeah, that's a daily chart. Do you want to look at any other?
DX, dollar, US dollar.
This is the US dollar. Correct.
Isn't that the S&P?
No. Oh, you know what? I'm sorry. I switched charts. Hang on. All right.
Yeah, look at that.
Okay.
Dollar.
My apologies. I had switched some things around while I was talking. Okay.
Yeah, this dollar could be just ready to go, ready to break. And I think when it does start to break, it's going to be a big deal, because, the stimulus that's been going in just doesn't justify $100 on that index. It's more like an $80 number is more realistic as to where the dollar should be. And look, the dollar breaking down from here is just going to be like elixir for the gold, for the world markets. It's going to give the global economy a chance to rebound, and it's going to be very bullish for the US. It's going to be bullish for stocks. It's going to be bullish for gold, and it's going to be bullish for US industry, and it's going to be bad for Chinese, because apart from deserving about 2 decades in exile and bringing all the 70,000 companies back to the US, which could create the roaring 20s later on this decade, and I hope it does. In the meantime, these moves will not necessarily be ultimately long-term detrimental to the future of the world. And perfect example of that is 1979. 1980, gold went to 875. Did it really make any difference to the world at the time? No, because 2 years later, the world got sorted out, and we started a 20-year bull market, like never before. So I think the same thing, we're going to have a really upside-down world for the next couple of years with incredible trading opportunities. But at the end of the day, I think later this decade, we're going to emerge into a world of space race 2.0, flying vehicles of all manner, and jetpacks, and all kinds of incredible things that are going to spur growth for the rest of this decade. So I think it's still a great time to be alive, in spite of everything that's happened. because the opportunities in front of us today are greater than ever before, and you can actually see them ahead of time in a lot of ways. So it's a time for everybody to hopefully benefit from what's coming, and I'm sure that anybody who's been following a lot of the advice on this show should have done pretty well in the last few months anyway, one way or another.
You know, it's real interesting, John. I have all of our members, partners, passport holders, they have access to unlimited one-on-one mentoring. They just have to go to our site and book it and all of that stuff. But it's included, and I teach everybody. Do you need to get that?
Yeah.
You need to get it? Go ahead. Go ahead and get it. I'll finish my thought. I teach everybody exactly the same thing. Some people are doing extraordinarily well, better than they've ever done, and some taking the same information, the same instructions, the same everything, are having a more difficult time with it. Okay? Does that have to do with one guy being smarter than the other guy or any of that kind of stuff? No. No. What it has to do with is that battle between the ears. Some have tamed the beast. Others are still in the process of taming the beast. So different people will get different results. Everybody gets the same training, same information, all of that. And
sorry.
No. That's what I was saying is that some of the traders that I work with very closely, because they specifically ask for more mentoring sessions, they ask for more of my time, which I gladly give them because that's part of what we do, what kind of sets us apart. Some of my traders are doing, better than they've ever done before, by far. Others are still wrestling with that mental beast inside, the one that we have to tame, the dragon we have to slay, the one that keeps us tied to our emotions. So we're trading not from a technical standpoint, but from an emotional standpoint, and that's just no bueno.
Yeah. No, look, there's no easy, look, you read all this stuff about people saying this or that, and they just ignore it because there's no magic formula out there. It's hard work, and discipline is 90% of success.
It is. It absolutely is. That one thing right there just might be, if I had to pick one thing that separates those from doing awesome with those who are doing okay, would be the amount of discipline that those individuals possess.
Yeah.
Some people are, it's like their feet are cast in cement. They will sit there till the trade comes to them, presents itself in a textbook fashion, and they act. Others don't have the discipline to do that.
Perfect trade come from putting, look, you know what Peter Steidlmeyer said, from day one when I met him, you got to be in it to win it. You've got to be aggressive. You've got to seize the day when it happens. What I'm working on, just so you know, and listen, I've got institutions lining up to get my service as soon as I get it going. I'm not going to make any recommendations because that's not the way I'm going to do this. It's going to be a trend service. It's going to identify trends in stocks, and so it's up to people to do their own, or maybe use other things to enter and exit. But they're certainly going to get on a trend as early as you possibly can through my work. And one of the things as I told you, I've kind of narrowed this down to like an inter-day or maybe inter-week type of thing where that catches that bottom of March 23-24, which was a pretty hard bottom to pick. The reason why it was hard to pick is because the bottom didn't all bottom at the same time, the same hour. If you remember, it actually bottomed at noon on Monday, the 23rd of March.
Okay.
And if you remember, I had people besieging me in the morning to buy. And I said, hold on. I said, don't buy until noon. I mean, I didn't know the market was going to turn at noon that day. But I just had a feeling that we were going to be down in the morning and up in the afternoon.
Mm-hmm.
And that's what happened. And it was kind of similar to the March 6, 2009 bottom, which was one of the reasons why we were able to pick that bottom as well. And it actually came down to the deceleration in the decline, and the rate of decline. The decline that morning was really not that bad. It was bad for the Dow because the Dow didn't bottom until the next day. That's what made it hard to. The tech bottomed first, and on the first day on the Monday, March 23rd. And if you remember, I telegraphed this several days ahead of time. I did say that I thought Tuesday would be an all-time record up day, and it happened. So but it didn't quite happen the way we thought. I thought we might go down a bit first on Tuesday and then go up. As it turns out, we gapped higher. Remember, the Dow closed down about 800 on the Monday, even though the Nasdaq closed up, right, or off its, well, can't remember whether it closed positive that day or not, but it certainly closed way off the lows. And remember that the Friday was the thing that kind of like threw everybody for a loop, because that was when the Nasdaq sold off rather dramatically. But the key to finding the bottom on the Monday was, even though it sold off dramatically on Friday, it didn't follow through on the Monday. In other words, the rate of decline was either turning or ending, and that's why we got the rally in the afternoon. So, and of course, since then we've had several incredible up waves. But what I found out is I'm able to see these up waves before they happen, and that's an incredible edge to have. And it's just been amazing. And look, I got a gigantic buy on the platinum a few days ago. Initially at 725, then another one at 50, and here we are. We just went through 800 a minute ago. While we've been speaking, platinum's gone up about $9, and silver is now taking off, because this is very, very good. By the way, this is a perfect thing where the gold and silver are starting to rally as the Fed is ending his little chat.
Mm-hmm.
This is as good as it gets. When you see the metals reacting to a Fed meeting like this and going positive, this is a buy signal. And could be the beginning of a ripping couple of days here in the gold and silver. Literally from this point forward. The gold is a little bit of it's a little bit down at the moment, but so it's a little bit trickier. But the silver, look, anytime the silver is leading and the platinum is leading, it's actually pretty bullish. There's certainly a lot less risk in buying gold. You really want to be buying the silver because you got to go with the strength. The silver and the platinum are really the opportunity today, and they're creating a buy signal right in front of our eyes right now in terms of how they're performing. So the fact that they're turning here in the last hour and going higher is sort of a lead-in for tomorrow through Friday, and tomorrow being the end of the month. Is it's sort of, you can see the way the story is coming together, and just as the market is morphing into May as strongly as it is, it's really amazing. Trump said this morning, he was kind of like explaining to people how the Dow was at 24,000,
mm-hmm.
and nobody saw that coming before he was elected. So to be at 24,000 today, given everything that's happened, is really amazing. So listen, I got to take this, but listen, have a great
okay,
afternoon,
John.
and thanks very much. Bye.
All right, take care. guys, let me finish this. Sorry guys, I'll be caught up here in just 1 second. Need to get out some alerts to some traders. Okay. Alright. Now, we've covered all the markets. And just a refresher on, we went through each one of the Concierge Trade Alerts one by one. Each concierge had a supporting Logic 247 alert. And where we stand for the week 91 of Logic 247. Why is it called Logic 247? Because every alert, there's a logical reason for the alert. And the channel's open 24/7, like 7-Eleven. Wonder why they call it 7-Eleven when it's open 24/7. I guess back in the day it was open 7 to 11. That was probably a big deal because when I was a kid growing up, the little town I grew up in Georgia, they rolled up the streets. I remember that saying. They rolled up the streets at 6 p.m. So it was kind of a big deal to have a place open until 11 at night. I remember my mom saying things like, well, anybody that's up that time of night, they're up to no good. That bell's for you, Mom. Okay. All right, so that's where we stand on the markets, on life, on all things in general. Let's go to our good word for the day. There are people in your life, you might be one of these people, who always say yes, but, oh, there's always a but coming. 1 Timothy 6:4. They have an unhealthy interest in controversies. They are conceited and understand nothing. They have an unhealthy interest in controversies and quarrels about words that result in envy, strife, malicious talk, and evil suspicions. 1 Timothy. He was pulling no punches there. Some people miss all the good things in life by focusing on only the stuff that's quote-unquote wrong. They miss the flowers in the garden and point out the weeds. Who are they? They are the yes but people. In order to help them and to deal with them the right way, here's how you do it. Number one, be discerning. Recognize that often their outward bravado masks a deep inner insecurity. It lets them shift the focus off of their own fears and onto the faults of others. Number two, be accepting. Our first inclination is to ignore and isolate difficult people. That's a mistake. Difficult people often want to be ignored, and avoiding them just provides the emotional distance for them to hide. Plus, it confirms their belief that you don't care and won't listen because you think they're wrong and you're right. Number three, Be interested. I didn't say be interesting. I said be interested. Show genuine concern for their family, their work, and their well-being. The yes, but people usually struggle with giving and receiving love. They're inclined to elevate opinion and loyalty above communication and reconciliation. And nowhere is it more evident than in their personal lives. So be prepared to pray with them about the trail of broken relationships that you're likely to find. And number 4, be kind. Number 1 was be discerning. Number 2, be accepting. Number 3, be interested. Number 4, be kind. In 1 Corinthians 13:4, the Bible says, love is patient, love is kind. It always protects, always trusts, always hopes, always perseveres. Love never fails. Avoiding the yes but people doesn't work. Neither does arguing with them or trying to straighten them out. You can't change the habits of a lifetime in 1 or 2 conversations. But given enough time, the one strategy that never fails is love. Remember, the commandment that Jesus left us with was to be disciples of men. He didn't say, and I don't want to step on any theological toes here, but he didn't say, get people to recite the sinner's prayer. Now, I know that, that's kind of what we've been taught all our life. Again, I may topple a sacred cow or two here. But that's not what I'm trying to do. I'm just trying to point out what Jesus asked us to do for him. It's like, hey, I came, I lived this life, I put on this man suit. I endured a very painful physical death for you. Now, as I go to be with the Father, so that I can send the Holy Spirit, I want to ask you to do something for me. And that was to make disciples, to disciple people. Now, that sinner's prayer that we've been taught and that we've been taught to get other people to recite, if all a person is doing is reciting some words, that's almost more like some kind of a incantation or something. Okay? Nicodemus, the original Nicodemus, he asked Jesus, he says, what must a man do, to get to heaven? Jesus said, you must be born again. So being born again is not about reciting some specific set of words as though they have some kind of magic attached to them. Being born again, not of water, when the water breaks, when a woman gives birth, but of the Spirit. So, in other words, as that person that you're hoping to lead to Christ, as you lead them to the altar, and we all know that altar doesn't have to be in a church. It can be in the front yard, in the backyard. It can be in the back of a pickup truck. It can be in a valley, a mountaintop. It could be in a public bathroom. What's important is that the individual that you're trying to lead to Christ understands the error of their ways, and that they're willing to come before God with a broken and contrite spirit, ask forgiveness for their sins, and then ask God to help me to go and sin no more. That's the real important part. Number one, forgive me of my sins. And God, by the power of your Holy Spirit, which I invite to come in and dwell within me right now, by the power of the Holy Spirit, I pray that I would sin no more, offend you no more, that I follow you, and that I light the path for other men to follow. So while I gave you these 4 steps, be discerning, be accepting, be interested, and be kind, that person who has built up a lifetime of feelings and emotions and habits and whatever, that's not going to change. Well, okay. Part of it changes in the twinkling of an eye if they truly are repentant, have a broken and contrite spirit, and really do want to go in the other direction. But that all does happen in the twinkling of an eye. Okay? But then the service is over, or the meeting that you had in the coffee shop with this person is over. You go home to your godly family and continue to live your godly life. But that person that you just prayed with in that coffee shop, they also go home, but they may not be going back to a godly home. They may be going back to an apartment in the projects where the guy next door, the guy on the left side of him sells crack, and the people on the right side, he's not sure what they're doing, but man, there's a whole lot of traffic coming and going. And every time he gets off the bus and walks to his apartment, 50 different people go, psst, psst, hey man, hey, check this out. That person needs to be discipled, okay? Yes, you got him to say the prayer, okay, however it's worded. But your job, what Jesus asked you to do, was to help that person become born again, to help that person have an actual change of heart, to become a new creature, a new creation in Christ. That's what Jesus asked us to do. I got people in my life. I've been working, I don't want to say working on them, working with them for a couple decades, you know. Sometimes you feel like you're winning the battle, and sometimes maybe not so much, but you just keep doing what Jesus asked you to do. And roll with the punches. Okay, let me get all that out of there. Let's see. All right, guys. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.